buying.
Welcome back. Equities are doing very, very well this morning. Like we were saying, 200-point rally on the Nifty. But let's find out what's happening with commodities. We have Manisha with the latest.
Well, thank you for that. I'm looking at copper as prices because we've seen very strong gains onto this one. If you look at the last couple of weeks, copper clearly is an outperformer, and it is an outperformer when you look at the overall base metal as a sector as well. I want to put forth on what we've done in various exchanges because that really tells the story. So when you look at the copper prices on LME, we've gained up by 12%, and we are like about $800 away from all-time highs. But when you look at the COMEX copper prices, we are up by 26% and at all-time highs. I mean, if you look at both of these markets, you can see that disparity that the global markets right now are working with in sense of copper there. Well, to begin with, the US is talking about putting tariffs on imports. This could happen as early as in the next quarter or by the end of this year. US imports nearly 45% of its copper requirements, not just in the conventional market, but copper is also now required for generation, AI, energy transition. So copper requirements going forward is going to be quite huge. So with the reviewing of happening on when this import tariff would be put, we've seen that premium build up in case of prices. So when you look at the US prices, we've hit a premium at a record high of $1,400 a ton. So if LME is trading at 10,000, you have copper at US trading at $11,400. I mean, that's the kind of disparity that there is into the markets. Also, when you look at the imports that are happening in case of US are at around record highs. Monthly, you have 70,000 tons of copper imports happening into US, but the last couple of months have seen 150,000, so more than double therein. And also, when you look at the US scrap exports that usually have been happening all of these years, those also seem to have dried up. So all copper, refined, not refined, scrap is staying in the US markets at this point in time. Now, that brings you to the rest of the world, and especially China, which consumes nearly 50% of world's copper. Usually, when the copper prices used to run up, China would stop buying, and that would lead to correction into the markets. Now, at these higher prices, even if China does not buy, you are looking at all of that copper actually going into the US markets. And then apart from that, Chinese demand is picking up because the manufacturing activity is picking up. You also are looking at more stimulus measures coming in. Also, the Shanghai copper is trading at the widest backwardation in more than a year. That tells you that the copper is more expensive right now and cheaper perhaps going forward after 16 to 18 months. So this is the time that everybody wants copper, and that's showing into the prices. Interesting report from Mercuria, which says that the global demand will see a deficit of around 320,000 tons in year 2025. There is a similar report that we also have seen come in from Goldman Sachs, which sees a deficit of 180,000 tons in this year and 250,000 tons in the next year as well. And the last chart should tell you on where markets are anticipating copper prices from here on. So $10,900 of an all-time high is what we saw in copper prices in the previous year. You have ING expecting averages to be lower. Goldman Sachs believes new all-time highs coming in. Morgan Stanley is looking at an average of 9,500. Citi talks about 10,000 in the very near term. And Mercuria continues to be very, very bullish. $13,000 a ton is what they're expecting in case of copper for this year itself.
Okay. All right. Got that, Manisha. Thank you very much. So copper in sharp focus today.